You're checking your portfolio again. That's the problem. How much has that cost you? INHD is up 1897% and you missed it. While you're calculating what 20,000 would be worth right now, your hands are shaking. I see it because I've been there. The Stoics called this the Tyrant of Comparison, the death of inner wealth. Marcus Aurelius warned that when we tie our identity to external outcomes, we become slaves to fortune's wheel. By the end of this, you'll know exactly why the investors who chase these gains always lose more than they make, and how the ancient framework that guided emperors through war can guide you through market chaos. Here's what's happening to you right now. Every missed opportunity is reshaping your identity. INHD at 1,897%. Soon at 598%. You're not just seeing numbers. You're seeing proof that you're failing. Your brain is rewriting your story. I'm the person who always misses the big ones. I'm the cautious one who watches others get rich. This isn't investing psychology anymore. This is identity destruction. The market knows this about you. It feeds on identity fragmentation. Every moonshot stock that rockets past you whispers the same lie. You're not the type who wins big. Every safe, steady return becomes evidence of your mediocrity. The VIX sits at 18. 55 today, measuring market fear. But it can't measure the fear reshaping who you think you are. Let me show you how this ends. You'll chase the next INHD. You'll convince yourself this time is different, that you've learned to spot the patterns. You'll risk more because missing out again would confirm your worst fears about yourself. And when that position inevitably crashes back to earth, you won't just lose money. You'll lose the last piece of your investor identity you still respected. Marcus Aurelius faced this exact psychological trap, not with stocks, but with an empire. Listen to his words, how much trouble he avoids who does not look to see what his neighbor says or does, but only to what he does himself. He wrote this while governing Rome, while generals around him competed for glory, while senators chased wealth and influence. The emperor, who could have had anything, understood that external validation destroys internal strength. But here's what Marcus knew that you don't yet. Identity isn't built through outcomes. It's built through process. Think about INHD's chart right now. Someone bought at the bottom and feels brilliant. Someone else bought at yesterday's high and feels destroyed. Same stock, same day, different identities created by random timing. This is the illusion the Stoics saw through 20 centuries ago. Riley Chen was exactly where you are 6 months ago. 28 years old, software engineer, convinced her worth as an investor was measured by her ability to spot the next rocket ship. She'd wake up every morning, check the pre-market movers, and feel her stomach drop when she saw another missed opportunity. Her portfolio was performing fine, steady growth, diversified positions, but fine felt like failure when she watched others celebrate 4-digit percentage gains. Then Riley discovered what Marcus Sterling had been teaching for 30 years. Marcus is 71 now, started investing in 1975, lived through every crash, every bubble, every moment when the market tried to convince him he wasn't good enough. His silver-rimmed glasses have seen Black Monday, the dot-com collapse, 2008, COVID, and now the AI speculation bubble of 2026. His weathered hands gesture deliberately when he speaks, because every movement is intentional. No wasted energy. No wasted emotion. Marcus told Riley something that changed everything. The Stoic investor doesn't avoid FOMO. The Stoic investor transforms it. Here's the framework he taught her. First, redefine what you're optimizing for. Riley thought she was optimizing for returns. Wrong. She was optimizing for identity validation. The Stoic investor optimizes for sleep at night. Literally, if your positions don't let you sleep peacefully, your position sizes are wrong, regardless of the upside potential. Marcus Aurelius governed an empire but wrote, "At dawn, when you have trouble getting out of bed, Tell yourself, I have to go to work as a human being, not as an emperor. As a human being, your identity isn't your portfolio performance. Second, practice negative visualization with missed opportunities. This sounds backward, but follow the logic. Riley started each day by deliberately thinking about the gains she'd missed. INHD up 1,897%? Good. She'd calculate exactly what she would have made if she'd gone all in. Then she'd visualize the crash that follows every parabolic move. She'd see herself buying high, riding it down, selling at a loss. The Stoics called this premeditatio malorum. By mentally rehearsing both the gain and the inevitable loss, she removed the emotional charge from both. Third, create identity-independent position sizing. Riley's new rule: never risk more than 2% of her portfolio on any speculative play, not because she couldn't afford to lose more, but because her identity couldn't afford to be right or wrong by more than that. When you win big with small positions, you feel smart but not invincible. When you lose small, you feel disappointed but not destroyed. Your identity stays intact through every market cycle. Fourth, define your edge and stay there. Riley's edge was identifying undervalued software companies with strong moats. Not biotech moonshots. Not volatile penny stocks. Not AI speculation plays. When INHD started running, she didn't suddenly believe she understood biotech. She celebrated others' wins and bought more of what she understood. The Stoic investor knows the boundaries of their knowledge and treats them as sacred. Marcus Sterling watched Riley implement this framework through the INHD run. While her Twitter feed exploded with screenshots of massive gains and devastating losses, Riley slept 8 hours a night. Her portfolio grew 23% that quarter. Not 1,897%, but 23% more than she had 3 months earlier. With 100% certainty, she could repeat the process. Her identity wasn't built on one trade anymore. It was built on sustainable edge execution. Here's what happened to INHD after that 1,897% gain. It crashed 78% in 2 weeks. The biotech catalyst that drove the run got delayed by FDA concerns. The same social media accounts that celebrated their genius at the top posted screenshots of devastating losses at the bottom. Their identities got built on luck and destroyed by reversal. Riley's portfolio barely noticed. She'd allocated 1% to biotech speculation, lost half of it when INHD crashed, and still outperformed the market that month because her core positions held strong. This is who the Stoic investor becomes. Not someone who never misses opportunities, but someone whose identity doesn't depend on catching them all. Not someone who avoids risk, but someone who risks only what they can afford to lose without losing themselves. Not someone who doesn't feel FOMO, but someone who transforms that feeling into disciplined action. Your worth isn't your net worth. Your identity isn't your last trade. These aren't just motivational phrases. They're operational principles that determine whether you survive the next 20 market cycles or get eliminated by the first real crash. The market will always offer you chances to prove you're special. INHD at 1,897%. Sune at 598%. Tomorrow there will be others. The Stoic investor doesn't need to prove anything to anyone, including themselves. They know who they are, regardless of what happens to any single position. Marcus Aurelius ruled the known world, but found his peace in accepting what he couldn't control. You can find yours the same way. Control your process. Control your position sizes. Control your identity anchors. Let the market do whatever the market does. The investors who survive every market cycle all share one trait. Next video names it.